This video is made in partnership with Sprive, who can help you get mortgage free faster. What's going on, people? Welcome back to the channel. Today we're talking about mortgages. Very important topic, whether you are on the property ladder already or if you're interested in getting onto the property ladder in the next few years or in the future at some point. This video is important, and we're going to focus today on how to save money on your mortgage. And in future videos, if you like, you can leave a comment down below and let me know if you want me to do a video on things such as mortgages, basic terms to know, or explaining how mortgages work. But for today, we're focusing on how to save money on your mortgage. Alright, so we're going to talk about 5 key ways that you can save money on your mortgage. And the first one is refinancing. When we say refinancing, it basically means jumping from one mortgage product onto a new mortgage product. And the idea is, if you jump to a new mortgage product, you might get a lower interest rate. However, currently interest rates have risen, so it's probably not a good time to do that right now. If you see this video at some point in the future, given the interest rate environment, it might be worth considering refinancing. Oftentimes, if you cancel your product early, you're probably going to face a charge. However, it makes sense to see what other options are there available in the market, and if moving to a new product at a lower interest rate with lower fees makes more sense, then you might be inclined to take on a small fee here and go to the new product. And so typically when you're on one product, you're locked in for like 3 to 5 years. If you go for like a 3-year fixed rate mortgage or a 5-year fixed rate mortgage, rather than being locked in for 3 to 5 years paying a higher interest rate, it might make sense to take a small hit at the beginning, move to a new product, and then, 3 to 5 years, that's 12 monthly payments each year for 3 to 5 years. That's a lot of money that adds up. So that's one way to save money on your mortgage, refinancing. All right, the next tip is to focus on your deposit. Oftentimes people don't know about this, but it's very important and it can save you a lot of money in the long run. Deposit bands. So when you are buying a property, you might have a 10% deposit, a 20% deposit, 30% deposit, whatever it might be. Always try to hit the band. So typically, if you've got a 10% deposit, you're probably going to get the same interest rate as someone with a 12% deposit or a 13% deposit or a 14% deposit. It's always good to check these things with the lenders online, right? But if you have a 15% deposit, so the 10% band, the next band up is the 15% band, you unlock a better interest rate. And then if you've got a 15% deposit, you're probably going to get the same rate as someone on a 16% deposit, 17% deposit, 18% deposit, etc., all the way up to the next band is 20%. So different interest rates, you basically, a 10% deposit unlocks a different interest rate to a 15% deposit, to a 20% deposit, so on and so forth. So there's no point really putting a 14% deposit if you are gonna unlock a new band at 15%. And why this is important is because each month you're gonna make a huge payment, right? Paying off either the interest or the interest and the equity on the property. And so that could be from $1,000 to a couple grand every single month. And typically you're tied in for 2 years or 3 years or 5 years, and that adds up. And so when you are looking to save money on your mortgage, try and consider deposit bands when you're first getting your mortgage from the lender. Tip number 3, make as many overpayments as you can. And this brings me on to Sprive, who are actually sponsoring this video. One of the biggest costs of taking out a mortgage are the monthly interest payments, i.e. money that you give to the bank for lending you money to buy the house or the property that you're living in. However, Sprive, which is a free app, helps you pay off your mortgage faster and save thousands in interest. It takes minutes to get started, link your bank account, find your mortgage, and set your limits. Sprive will then automatically set money aside each week based on your spending, and with one tap you can make overpayments to your lender. This will help you pay off your mortgage faster and is useful because at the beginning of your mortgage you're mostly paying interest. If it takes 25 years to pay off your mortgage, you're going to be paying interest over those 25 years. However, if you pay off your mortgage in 20 years or 15 years, then you're only going to be paying interest over those 20 or 15 years. Therefore, making overpayments, which Sprive allows you to do, can save you a ton of money. Sprive lets you take control of your finances. After all, who wants to spend the rest of their lives paying off their mortgage? The app gives you total control, so it's easy to pause, cancel, or withdraw if needed. Personally, I think Sprive is a novel concept and one that if you've got a mortgage, you should definitely consider using. To download Sprive for free today, hit the link in the video description down below, or you can scan this QR code. Best of all, Sprive are giving everyone who uses the code AFZAL5 £5 into their account, but be quick because the code will expire in 7 days. Now let's get on to tip number 4. End your PMI early. Now, for those of you that don't know what a PMI is, it's a private mortgage insurance. Typically, if you are putting a deposit on a property that is less than 20%, you are considered a risk to the lender. So the bank giving you money, they consider you more risky than someone putting more than a 20% deposit. And so as a result, they are going to have PMI, private mortgage insurance. And this is going to be anywhere from 20 to 50 quid or 30 to 60, $70 every month throughout the life of your mortgage until you surpass that 20% deposit. So until you own more than 20% of the property, you're considered a high risk, and so you're going to be paying that additional monthly cost that goes towards the insurance for the lender. In order to pay it off early, you can make overpayments to contribute towards your equity, or you can purchase the property with a higher deposit. Easier said than done, I know, but if you can, you'll save a lot of money on your monthly payments if you pay a 20% or more deposit. And last but not least, review your budget here and there. You never know when you have an extra few hundred quid lying spare or doing nothing, you know, sitting idle in the bank, being hit by, I don't know, the rising cost of inflation, whatever it is. If you've got a spare few hundred quid lying around, put them towards your overpayment on your deposit, because if you do so, you're saving money over the long run and you're reducing the amount of interest you're going to pay to the bank. Obviously, it goes without saying, prioritize your higher interest debt. So any loans or any debt that you have that have a higher interest rate compared to your mortgage, prioritize those accordingly. But if you can afford to, then put it towards your mortgage. That way you're going to save over the long run. If you're on the property ladder already and you've got tips, leave them in the comments down below. If you're not on the property ladder, let me know. If you want more videos on mortgages and more explainers defining the different terms and explaining the whole process, if that will be useful for you. With that, I will see you in the next video. Peace.